All right, guys, we're looking at three stocks today: APP, KTOS, and AGX. These are in different sectors. APP is like the digital ad, sort of banner ad segment. Well, app banner ads. KTOS is in defense, and then AGX is in insurance. So they're not the hottest sectors, but there are some AI reasons to buy these. Literally, they're in AI in a way. So let's take a look at, first off, AGX. It's up $230, just about. Strong earnings. It was weeks ago, and that was at a time where they were already up since March, April, just about 140%. So it's not really criminal that it went sideways after that huge run and digested after earnings. That's kind of expected based on how much of a run this went on. And should you buy it right now? Well, you might want to wait until it gets over 255. They did announce a $200 million share repurchase program, and the AI portion is they're using that more and more frequently to reduce risk and claims cost. Just like, Capital One's been using AI for a decade or more in the same sort of sector of reducing basically fraud. But other insurance names like CINF kind of holding up as well, building out a base. HIG building out a base. Hartford. So AGX is definitely up there, but this run is really indicative of another run, which is why it's high on the list. Now, KTOS, defense stock, building out a base as well. So if the market turns up here after this little pullback the last few days, well, really the end of last week, this could be pretty exciting. You might want to wait until after earnings today if you happen to see this before then. They did win a $300 million contract from the Department of Defense in the drone space, so pretty massive reason to buy them. And their revenue jumped 20% year over year in Q2. So defense sector is hot. We've seen Palantir, of course, having a great earnings and continuation there. And then LMT is another one to watch, as well as NOC. Besides Lockheed, these are both had continuations. Well, LMT had a bounce, so a little different. But KTOS looks best because earnings is coming up. It had a run and a consolidation into earnings. So if this earnings is strong, you can buy that with a high volume close setup, meaning when the first day closes strong, you can buy risking that previous close. And fundamentally, it's following on the heels of Palantir, which you can buy at a lower price than Palantir, which is already sort of ripping. All right, AppLovin, it's the last one. Around 4:30, they just had earnings within the past 12 hours for me recording this. And it looks like this could close strong, be a great buy if you've been looking to buy AppLovin, which, it's been almost incredibly a year since it's built out this base. This was pretty gnarly, but remember, this run was absolutely insane. It was up 400% and then up to almost 600% at its peak. So it could definitely make another run, which is why it's on radar. And then the reason to buy right now would be the earnings. Q2 revenue, 25% up year over year, stronger ad sales, smart sort of monetization placement. And then ad tech is doing awesome with, PUBM. This is called like PubMatic. And then TTD. I don't actually know what this one is called, but both of these look pretty strong and they have a lot of smooth sort of price action, which is a lot safer than something like AppLovin. But the reason I'm going with AppLovin is it just had this run over here. So people are going to be excited to buy it, looking for another run. Of course, you want to be on that trend if it does happen. And again, fundamentally, they do have a reason to buy it. So tech and defense is interesting. KTOS, I think, is the one to buy right now, but there are some other stocks as well just to keep on radar if you happen to be at your computer. Shopify, I mentioned in a very recent video. This is a good buy here. I'm stumbling over my words here because Apple, I do want to caution buying this, even though it did have this big rebound today. So just a couple of spark notes before we close out this video, if you happen to see this in the next couple of days. So long term, though, longer term, Weeks, months, AGX is a great buy, KTOS is a great buy, and AppLovin could have another 300% run. It could. I'm not saying it will. I'm not saying you want to hold it for 300%. I'm just saying that now represents a really good opportunity to get in this high momentum stock with a really clear risk reward, where you can risk a few dollars a share and maybe make, $40 a share, maybe $100 a share if we get back up to this all-time highs. Check these out. Drop a ticker in the comments. You guys are awesome. See you in the next one.